Welcome to this week's 7X Investors Look Ahead. This is where we'll take a look at a currency pair, an index, or a commodity like gold or oil, and give you our outlooks of what we see coming this week. Before doing that, we like to share with you a little bit about 7X Investors. It's a platform where you can develop a free account and join our community. In that community, you can be able to have free trainings, which we hold every Wednesday. You can also gain knowledge from other traders that are in the 7X community or even in the other communities such as Alpha Trader or 7X Futures. As you attend the weekly trainings, you can be able to get a more in-depth understanding of what kind of trader you would like to become, whether it be in futures or in forex or CFDs. Once you decide what you'd like to do, we have specialized trainers which will go through step by step on how to become a proficient, profitable trader. We have Cordell Stevens in the Alpha Trader section, which deals with trading CFDs or currencies. And we have Dan Kelly in 7X Futures, which trades futures in the NASDAQ, the S&P, and gold. At the end of this video, we encourage you to click the link below, which will take you to our website, and you can set up that free account. Also, subscribe, like, and turn on notifications of the site so that you can get notified every time we release our week ahead video. Now let's take a look on what's ahead. Hello everyone, welcome to this week's look ahead, and today is September 11th, 2023. Let's go ahead and get right into it. Here we're looking at the S&P or the ES, and what we are seeing here now is we're seeing a consolidation beginning and something like a wedge starting to form. What we are looking for, we came down last week, so this is a weekly chart. We came down last week. We had that going to the downside on NASDAQ, and likewise it would be the same here on the S&P. What we're seeing now is a pullback after that move down on the weekly chart. We're going to go down now into the dailies, and we're going to take a look at this. So the one or two things going to happen here. Let me grab my pen, and we're going to look at it. A break above this level would mean a continuation to the upside, okay? If we come up to this level right here, and then we turn around and head down, we're going to head down to this part right here. Now, when we get to that spot, we got to see if we bounce again and break out, or if we break through, pull back, and then roll over, which gives us the short. That's what we're looking for this week in both the S&P and the NASDAQ. We'll look at the NASDAQ next just to see how these two are lining up and are similar. But that's what we're looking for. We're either looking for this move as a pullback to break out, or this move to pull back, come down, hold, break out, or break down, pull back, and down. Now, where are the trades at? Let's clear this up so we can look for the trades. So what we're looking for now is the trade will be, now let's draw this line out again. The trade will be, if we're long, a break and hold above this line right here. And that means we would break, hold, pull back, and then the trade would go into play to the upside. And that's how we would go ahead and trade that. The next trade would be if we broke and held below this area here. If we broke this section, held below, pull back, and then the trade would be there. That's how you would go ahead and trade this on the daily chart. If you want to go down into the weeds and start trading on an intraday basis, what you're going to want to do is look at these levels here. So you have a level we're approaching now. That level, if we roll over here, you want to go down short to this level. You want to watch that level right there, because that's going to be your swing. So your pullback here, your swing down and down to the 27 fib extension. And that's what you're going to look for when you're trading that. And that's the way we would trade it. I wouldn't trade anything going up to here. I would just look to see if it breaks out of here, but if it rolls over, trade it down to that level. If it breaks there, let it break, wait for the pullback, and then as it rolls over, trade it again to the swing to the downside. We got this entire swing here that's got to work itself out down to about 43.10 on the S&P. So that's what you're going to look for trading the S&P. Next, we look at the NAS 100. We see here that this is looking a little bit more bullish today and looking like it's just going to push on out. That may be the case. We have had a good pullback here, which we had last week. It did pull back to the 50. So you're going to be looking at this thing as a possibility of breaking out. Again, the trade is this. It's very simple. Once you break this level, hold, pull back, you continue to the upside. And that's the way it's going to go. If this holds here today and starts rolling over and comes down here, pulls back and breaks, that's going to be your trade down there to the short side. And that's where you would look at it on a daily basis. Now, of course, down in the weeds, it's going to be a little bit different. But this is perspective given to you over a period of a week. And so this week, we're looking for one of those two scenarios to happen for this to continue up, break out, hold, and continue to move in the top side area. Or roll over, break down, and come down here to this channel line right here, which lies about 15 on the on NASDAQ 100, lies about 15,127, somewhere down in there. Those are the trades for the indexes that we're looking at. Next, we're going to look at dollar. Last week, we were long in dollars. That worked out very well with us. So we were short indexes, long dollars. This week, we have kind of a bearish candle forming on the day in dollar, okay? So now we got to find out, does this hold this support zone right here? If it does hold the support zone and it starts climbing back up, we're going to look for a 105.93 target in dollar. Now you see here, this broke this channel line. See, it came up here, it pulled back, and now it's breaking, pull back, and we're looking for this. We expect it to move up. However, if it breaks the channel line and comes back into it, look for a downside move on dollar. So my suggestion is this: watch for tomorrow, see if there is a reversal on this candle, starts moving to the long side. I would look to get long it there, and then if it breaks this support line or today's low in dollar, if this is finishing up this low in this low, then watch for it to break that low again and come into the channel. Then I would look to trade it short. But at this point, I'm looking at this candle. I know it's quite large, it's quite bearish, but I'm looking at it as a pullback. If it gives me the signals that it's going to break through this channel right here, then I'm going to look at this as a continuation to the downside, and that's going to give me the indication that I need to be long the indexes. So that's really what I'm looking at, or what I'm looking for today for this to pan out. Give me an understanding where this is going to go to on the close coming in tomorrow on turnaround Tuesday, and see if it pushes it back up and we hit this target up here, 105.92. Nothing goes up in a straight line. So last week we were long. This week it's pulled back. Maybe it turns around and starts heading to the long side again. We will see. But we know the trade setup. The trade setup is right in here. So we look to go long right in there. If it breaks it, it's a short stop. You're not going to get hurt very much. And then we look for it to move further down for dollar. Pound Aussie, it is looking like it's going to head down lower. We're looking for a hit of about 1.9348. Now, this is the area of interest right here. If we hold this area, then we would definitely look for a pullback and a move higher. Okay. Now, the question is, does it break this channel here and break out past that? We don't know, but we could look for a trade that sets up there about 1.9628 to 22, and we could trade it to there from here if we get the signal. What's the signal? If we get either a bullish candle or something like a trend change down the smaller term charts, we're looking for, again, tomorrow a continuation, or today a continuation down to this level for sure. And then we'll see what happens here. If we get a bullish reversal, we're going to take it, but we'll only take it up. Let's just draw that. So we got a firm price target on it. we're going to take it up to about 1.9625. And that's where we're going to look to take pound Aussie. After that, it's anyone's guess, but a break above this level, a hold. So we break, come back, it looks like we're going to continue to the upside. If we hold this level here and we start heading down, we could break, pull back, and then have a continuation down to this level about 1.896. Obviously, that's not going to happen all of next week. But what we are looking for is we're looking for a hold right here, and this to reverse up at least to this level or close to it. And if it has enough juice, it's going to break. If not, it's going to roll over, and it's probably going to break this level here. So that's what pound Aussie we're looking for. We're looking for a long here and up to this level here, and then we'll see what happens after that. We're going to wrap it up with gold here for what we're looking for as far as trading is concerned. We're going to look at a couple more charts after this, but we had this going down short for this first part here. Now we traded it short from here to here, but we did not capture this last part here because we're looking to figure out what gold is going to do. So here's where the trade is this week, and let's blow this up so we can see it. So a break and a hold below this level right here is going to push gold down to this level right here. So the trade would be from here to here if we break and hold below this support zone. If we hold here and we start moving to the top side, a break above here, pull back, the trade would be there. And we will look for a continuation to the top side to about, it's going to be setting up here about in the neighborhood of 1950, 1963. So we would look for that as a move in gold. You could long this here for the push up, but if you get stopped out at a break here, you want to turn around and get short this down to this level here, which sets at about 1894 and some change. So be really careful at this area here. It's in consolidation, and we are looking for it to break that consolidation this week. Let me just mark this out. So this is the consolidation zone. If you're going to look to short this, I would short it at the top of the consolidation zone, right up in here. If I was looking to, if I think this is going to break the bottom, I would short it up in here. If I think it's going to break the top, I would go long down in here. That way, if you get stopped out, your stops are short and sweet. You don't lose a lot of money versus if you get long here and it comes all the way back down here, stops you out. You don't want that. But that's the trade on gold this week, and that's what we're looking for. It's going to break high or it's going to break low, and those are the zones we're looking at to trade it for those types of trades coming into play. Last week we talked about the VIX. VIX determines volatility. Volatility determines risk. So the higher the vol, the higher the risk. The lower the vol, the lower the risk. So if high vol, you got risk on. Low vol, you got, risk off. Low vol, you got risk on. And so last week we said we didn't think that this would be coming down to this level again for quite some time. It did push up. We'll move that out of the way there. So it did push up, but is pulling back. We need to see if this holds the pullback. If it does, we're going to see this start to climb up like we had it drawn out here last week. Now, one of the things we need to be cognitive of is that during a bullish, sometimes a bullish index like the NASDAQ or the S&P going up, the volatility before a crash or before a reversal will also go up. So again, I've mentioned this in the past. One of the things we want to look for is we want to look volatility going up at the same time. Maybe the NASDAQ and the S&P goes up. So if you're using this to trade an index, be very careful at this time as we're getting prepared to go into some type of a recession or a pullback in markets, because markets could be climbing very rapidly. At the same time, risk could be going up exponentially as well. Now, we know anything over 14,000 small cap starts to look at it and go, we need to cut back our risk. Large cap over 16 is where they look at cutting back their risk. But again, when there's going to be a big bearish run, you generally have both of these going up at the same time, because what's happening is they are collecting to get involved in that large move to the downside. I know everyone a few weeks ago was talking about Michael Berry's positioning over $1 billion in short positions. Now, obviously, we don't know where specifically. People who aren't really following in detail in his filings aren't knowing exactly where they're putting money in and how much and so forth. It could be in a lot of different areas. But in any case, is he right about this? He put in a large bet. Is he right? Well, yeah, he may be, but he may be right like 6 months down the road. He has the ability to stay in a trade for that long. You do not as a retail trader. You don't have billions of dollars that you can leverage through different types of lending and investors coming in. He does. So be aware that when you hear things like that, a tendency for a lot of retailers is to go ahead and get short the market and just hold it through thick or thin. And if you do that, you're going to get tore up. You're going to get wrecked. Your account's going to be gone before the move ever really occurs. So that's why we look at the markets week by week, day by day, hour by hour, 5 minutes by 5 minutes if we're day trading. It's just the way it is. You got to trade what's in front of you. You got to see what's going on for that day, for that week, for whatever period you're looking at to trade in. And once you discover where it's at in that range, then you're going to go ahead and get in there and trade it. In this case here, we got a pullback in volatility, so markets are kind of popping. That's what's going on. What we want to watch is, does this volatility start to climb? And that's what we're looking for in this happening this week possibility. So this is a pullback, and then we continue to the upside. So keep an eye on that. Okay, one of the things that we're looking at in yields is this channel line right up here. This is a very big spot right here. And it looked like this bearish candle right in here. Now, it's not an outside candle, but it's, it's good sized bearish, and a continuation down was going to give us, this whole thing pulling back, okay? However, this candle setting out there today, and we're just kind of figuring out where this goes. Does this break above this level right here? Again, if it does, and it pulls up and breaks this level, yields have a long ways to go. And what does that mean? That means a short in gold. That means gold is going to the short side. Now, right now, this is consolidation. We're not exactly sure where it's going to head to, but those are the things we're looking for. If this, again, breaks above this channel, which sets up here, this resistance zone, which sets up here, if it breaks above this, it is going to fly, and it's going to fly somewhere up in this neighborhood, probably setting right up in here. So that means yields are going to go for almost 4.5% if that's the case over the next few weeks. If that is the case, again, I would be short gold. Gold is going to go short in a big way, and if yields go long. So keep that in mind. But right now we're in a consolidation. A break below this low or break above this high is what we're looking for. And be very cognitive of this chart as you trade gold. It's very important because it's really kind of a front runner of what's gold is going to do. Saying gold too much. So keep an eye on this chart when trading. So that wraps it up for this week. I hope everyone had a great week last week. We did pretty good in the trades. We got our shorts in the NASDAQ. We got our longs in the dollar. We got our shorts in the gold, and did pretty good. We had some dollar yen in there. We did good with that as well. So with all that being said, let's look forward to this week again and see if we can pan some of this out in the pound Aussie, in gold, and in the indexes. Take care. Have a safe week trading. Remember, risk is very important. It's more important than the gains, is protecting what you have. And very important that you keep your losses small and your gains much larger. That will make you a profitable trader. And again, come visit us at www.7xinvestors.com. That's going to be the place that you can come to ask questions, to get help for free. We have free weekly trainings, and you can determine over time where you want to set yourself into, if you want to trade FX, if you want to trade futures, what you want to do and how you want to do it, and then you can get on a path with one of our mentors to be able to help you get yourself there. So take care, have a great week, and we will talk to you again.